Good day and Happy New Year. Today I'll be reviewing Barbados' economic performance for 2010. The economy leveled out in 2010 and a balance of external payments and receipts was achieved with the benefit of some market borrowing and official inflows. Preliminary estimates suggest that the economy contracted by just 0.4% compared to a decline of 4.7% in 2009. However, the anemic performance of North American economies meant that tourism and international business and financial services did not live up to expectations, and the knock-on effects depressed cash flows throughout the economy. As a result, unemployment increased somewhat. Tourism, the main engine of economic growth, began to recover in 2010. Value added in the tourism sector is estimated to have risen by 3% up to November 2010. Arrivals from Canada and the USA were up by 17% and 13% respectively. Airline seating capacity from the US and Canada increased by 11.5% and 22% respectively, thanks to additional flights by low-cost carriers. In addition, marketing was intensified in the major tourism source markets. Some notable events that drew people to Barbados included the Barbados Food and Wine Festival, the ICC World 2020, and the IAB Women's Boxing Championship. The UK market, which had been in decline, appears to have bottomed out around mid-year. As a result, arrivals to November were down 6%, compared with a 14% fall in 2009. Arrivals from Caribbean countries fell by 3%, despite an increase in visitors from Trinidad and Tobago. The international business and financial services sector contracted for a second year, but by less than in 2009. For the first 9 months of 2010, the number of new licenses issued to companies operated in the sector was 8% below the number issued in the corresponding period of 2009. The number of registered offshore banks declined by 6% during the year, and total assets fell 12%. A protocol to the double taxation agreement with China was signed and ratified in the first quarter of 2010, and double taxation agreements between Barbados and Panama, Portugal, and Spain were also signed in 2010. Private capital inflows were somewhat better than in 2009, but well short of pre-2007 levels. Private inflows were estimated at over $370 million, consisting primarily of real estate sales, financing for several tourism projects, and funding for a major manufacturing project. Official inflows included a loan of $90 million from the Inter-American Development Bank to support alternative energy production, and a loan of $50 million from the Caribbean Development Bank in support of official economic policy. In addition, inflows were boosted by the flotation of a $200 million bond in August, half of which went to repay a maturing obligation. The foreign exchange reserves at the end of the year stood at $1,451 million, the equivalent to purchases of imports of goods and services for approximately 21 weeks, and almost on par with end 2009 levels. These reserves are a contingency fund and are not normally used to pay for imports. During 2010, imports were fully financed out of receipts from tourism, international business and financial services, exports of goods, and private and public capital inflows. Receipts from exports of locally produced goods grew by an estimated 17%. Exports of chemicals, crude petroleum, and rum grew by $51 million, $10 million, and $6 million respectively to October. Earnings from sugar fell 45% to $23 million. because of severe drought conditions, reduced crop yields, a fall in the value of the euro vis-a-vis the US dollar, and the phased reduction of guaranteed prices. The current account deficit widened to 7.4% of GDP in 2010 from 6.6% in 2009. A 29% increase in the price of fuel drove up fuel imports by 1/3. In addition, imports of food and beverages grew by 8%, and imports of motor cars increased by 22%. In contrast, imports of construction materials fell by 11%, and imports of machinery were down 9%. Because of weak spillovers from the foreign exchange earning sectors, activity in the non-tradable sectors declined marginally. Quarrying increased by 14%, crude oil production rose 7%, output of public utility services increased by 2.5%, and activity in transport and communication services rose 2%. However, output in distribution and other service industries remained stagnant, while the construction sector contracted for a second successive year by 12.5%. 2 years of economic contraction have made it difficult for private firms to avoid layoffs, and there was a modest increase in unemployment in spite of government's incentives designed to alleviate the pressure of employees' benefits on companies' cash flow. The unemployment rate was 11.2% in the third quarter of 2010, some 0.7 percentage points higher than a year earlier. Inflation was somewhat higher in 2010, mainly as a result of import prices. The 12-month moving average inflation rate was estimated at 5.4% at the end of October, compared with 4.4% a year earlier. Other factors contributing to rising inflation were higher prices for food, housing, and transportation. Government persisted with a strategy of fiscal consolidation, along with measures to protect the most vulnerable and to maintain tourism competitiveness. This effort was made more difficult by weak revenues, especially because of poor tax receipts from the international business and financial services sector, a reflection of the low profitability of firms in this sector. Despite a reduction in government revenues, the fiscal deficit to GDP was lower than in 2009 at 8.8%, compared to 9.4% 1 year earlier. Government revenue fell by an estimated 6%, with corporate tax receipts down 26%, personal tax receipts down 6%, and property tax revenue down 1%. On the other hand, receipts from the value-added tax were up 3%, and excise tax receipts were up 4%. Containing expenditure was a challenge. Total government expenditure was cut by 5%, with wages and salaries down by 3%, and expenditure on goods and services 13% lower. The reduction in transfers to public corporations was modest at 0.7%. However, the subvention to UWI, which now absorbs 23% of the education budget and accounts for 21% of the allocation for transfers to statutory corporations, was 8% higher. The subvention for the QEH, which accounts for 41% of the budget for health and 31% of allocations to statutory corporations, was down 10%. Pensions and other transfers to households increased by 6%. Interest payments increased by 11% because of the additional borrowing needed to finance recent deficits. In contrast, the brunt of expenditure contraction fell on capital expenditure, which was cut by an estimated 42%. Additional tax measures were necessary in order to bring the deficit for the 2010-2011 fiscal year back in line with government's medium-term fiscal strategy.